Hello everyone, and thank you for tuning in to this quick and brief update. I'm Joshua Dobi. Appreciate so much your willingness to continue to engage in this fashion and also with the frequency that we're increasing here, especially during this time of negative volatility. And that's really why we've increased the frequency in the ways that we have here, because we want to be in front of you. We want you especially to hear what we're thinking, what we're seeing, and then of course, most importantly for everybody, what we see coming ahead of us. But thank you again so much for your time, and to be respectful of it, I'm going to dive right in. We had our last print last week in terms of, I call it a print, in terms of our inflation reading, ticked up over 9%, 9.1% year over year. That was inclusive of the more volatile food and energy prices that we've seen here. We also had a significant tick up in the PPI, which is the producer price index, as well last week. So the inflation bug, if you will, continues to be with us. I don't need to tell you, if you've been to a gas station or a grocery store anytime in about the last 6 or 8 months, you know exactly what I'm saying. However, I'm saying that, A, to describe where we've been, but then B, to give you a couple of caveats to that. The first one is, those are backward-looking figures, meaning those are representative of the month which has preceded us. I don't like to do micro kinds of targeting in terms of data analytics because I think that they're incomplete in terms of describing what we, not only what we see, but what we anticipate. However, I'm saying that to say that that high mark that we saw there probably is not going to recur this month or the following month because of some things that we're starting to see. And I want to describe this for you very briefly right here. The first one has to do with commodities pullback. Now, you may not notice it at the gas station yet, but actually gas prices are starting to come down. I know they're quite a bit higher than where we were last year, no doubt at all about that, but they're starting to pull back a little bit, and that's primarily because a barrel of oil has pulled back. Depending upon how you measure it, Brent crude, West Texas Intermediate, has pulled back between 20 and 30% here over the last 60 days. We were north of $120 a barrel. As of the time of this recording, we are under $100 a barrel. So some pretty notable kinds of movements in terms of the price of a barrel of oil on the commodity side of things. But it's not just there. We're also seeing it in lumber, and that it most immediately affects housing industry, construction industry kinds of things. The price of lumber was super inflated for what seemed like a long time. It was a little over a year. It has fallen back about 50% off of the highs. Now that we're still super inflated, just not as super inflated, but we're starting to see what I would offer up as some of the effects of the increasing interest rates that have been pushed forward by the Federal Reserve Board of Governors. And we're starting to see that have an effect on our economy in terms of dampening demand or cooling things off. That should have a direct effect on dropping inflation. Now, if we get too carried away with that, not meaning to get too far into economics 101 here, but I think you'll understand why I'm doing it. If we get too far into that, you'll dampen demand so much that it will literally start to crush the economy. It will reduce the spending and fervor inside of the consumer to the extent that they're afraid to do anything else. So it's a balancing act. We're starting to see a dampening of demand, but we're not seeing it in ways that are so pervasive that we're seeing, call it an unnatural recession or an unnatural kind of economic pullback. We're not seeing that at this point. To put it bluntly, this is not 2008 and 2009. We're seeing none of those harbingers that we saw in that time frame that indicated we had a much larger issue, or several, frankly, large issues that needed to be addressed. We're seeing nothing like that at this time. So we're seeing those kinds of things, and we're wanting to share that with you because when we look at those numbers, especially the backward-looking numbers, it can be challenging. I get it. And especially when we look at it in a historical context, we think in straight lines. We think, okay, we were here, now we're here, now we're here, and we expect that we're going to go there. Not necessarily so. Actually, in almost all instances, the answer is it just doesn't happen that way. You've heard me say this a lot. It's like waves on an ocean. Some of the times we're at the peaks, some of the times we're at the trough, and a whole bunch of time we're in between. Right now, in terms of inflation, peak. Right now, in terms of the stock market, trough. And we're adjusting into that right now and trying to get a handle on, okay, then what do we see going forward, which is an easy transition to really the final part of this update. In terms of going forward, we've still got some road ahead of us that we have to travel. Meaning we don't see at this point that this is going to be an immediate kind of bounce back or a very quick kind of bounce back. We have to adjust to higher inflation. Not 9%, but maybe half of that in our analysis at this point. We have to adjust to higher interest rates. What that means in terms of, for example, higher mortgage rates, which is going to dampen some housing demand. What that's going to mean also, on the other side of things, higher interest rates in CDs, higher interest rates in money markets. And those of you who use banks are going to start cheering again, hopefully over the next 3, 6, 9, and 12 months. So what does that mean in terms of our current environment? Because frankly, we haven't been there for well over a decade, almost 2 decades, since we've been into that kind of space. It was really early in my career that we last had opportunity to experience something like that. So we're going to need some time to adjust to the new normal. That doesn't mean that everything goes down in that kind of environment, no matter what our business news programs or our business newspapers and magazines say. It does mean that things are different, meaning what necessarily was working before may not work in this new environment. That's why it's very important to be diversified. That's why it's very important not to make rash decisions whenever things have moved in the ways that they are. Tweaks and adjustments may or may not be important and necessary, but everybody's situation is unique, and that's why it's always, always important to look at it in the scope of your own space. Not your neighbors, not other family members, not anybody else who may sit in your demographic. It truly is a unique kind of scenario, and that's why we always, always encourage that when we're talking with folks. Well, friends, I want to be brief. I don't want to take up a lot of your time because we're doing this with more frequency. Thank you for your time, though. Thank you for engaging me in this way. Always, always, always. If you have a question, send me an email, give me a call. Always happy to respond. If I don't get back to you right away, it's probably because I'm in the conference room or on a previous call or Zoom, as is really our custom these days. I will get back to you as quickly as possible, I promise. But I appreciate you so very much. I hope that you're enjoying the summer season. It's a hot one in most parts of our country. I hope you've had a chance to enjoy that. If you're traveling, I hope you've had a chance to enjoy that. If you have kids and grandkids, that you've had opportunity to be able to enjoy them as well. If you're watching baseball and you're a baseball fan, depending upon which end of the country you're on, you're either having a really good season or not very good season. So it kind of depends on where you're a fan, but I hope you're able to enjoy it nonetheless. Well, friends, again, I appreciate so much you and your time. At any time, always feel free to reach out to us. And until the next time, I'll look forward to talking with you soon.